a couple of stock professionals, a couple of random people off the street that are newbies, an astrologer, and a dartboard. It sounds like the beginnings of a joke, but this is what a newspaper used to do in order to be able to prove a point. They would take stock professionals, they would take newbies, they would take an astrologer, and they would have a random dartboard that all picked stocks to see which one would get the best results. Now, there wasn't much difference between the newbies and the professionals, to be very, very honest. But the professionals generally had a 51% advantage to the 49% of the newbies. Interestingly, the astrologer was very, very mixed and got all sorts of different results. But the dartboard very often performed extremely well compared to all of them. Today, we're going to do a book review on an amazing book called A Random Walk Through Wall Street, which talks about the fact that a random stock selection could indeed be better than somebody who's used a professional, especially given the fees that they charge, which the book talks about, as well as the fact that professionals don't really know what they're doing either. Shh. So in this book, it talks about fundamental analysis and how that cannot really beat necessarily the stock market. And the reason for this is that things are really random in the world. So you could know everything about the company, who runs it, what their plans are, but plans don't always go according to plan. As Mike Tyson once said, everybody's got a plan until they get punched in the face. And that's the same thing that happens on the stock market. I used to invest in a Taiwanese semiconductor company, and everything was going great until there was an earthquake and the factory got damaged. That wasn't a part of my plan, let me tell you. The book also talks about technical analysis and how following the charts is also not necessarily going to be able to work in your favor. And this has to do with human psychology. And he goes into a couple of different things about psychology that are going to create issues with technical analysis as well. So we have to realize that life is random. And there is no way of knowing anything about what's going to happen in the future. And so we need to use that to our advantage, and the book talks about those kinds of things. So he talks about some science and some historic data. He talks about what worked in the 1920s and 30s and 40s and 50s, for example, and beyond, and how the allocation needed to change in order to be able to be a part of that market successfully during those times. But it would have been impossible to predict in advance. So he talks about different strategies for beating the market and how randomness plays its parts in that, and it is a really amazing book. One of my favorite parts, and this is what I'm going to finish up on, is that he talks about an analogy of walking down the street and you have a teacher with you and you see a $100 bill on the street. Now the teacher says to the student, "Oh, don't bother picking that up. If that $100 bill has been lying here for so long, it must be fake." And I think this is how we all go through life a little bit. We tend to assume how things are, and so it holds us back from really being able to achieve our potential with what is going on around us. We don't look at the bigger picture in that sense. What we need to be doing is we need to look at that $100 bill and say, "Oh, we better pick it up quickly before anybody else notices that there is a real $100. Because we can pick that up and find out that it's fake, or we can pick that up and find out that it's real. But most people never pick up the $100 bill. Okay, one more very quick story. We need to think outside of the box of conventional thinking in order to be able to succeed on the stock market. And another example that's not in the book, this is a video that I watched not long ago. There was a billionaire, and their name hasn't been disclosed, and they wanted to trade oil. And they discovered that oil reserves, so oil holding tanks, the lid actually goes up and down based on how much oil is in there. And so they realized that they'd be able to use that information in order to be able to figure out, so not what you find in the newspaper or what a professional is going to be telling you. They figured it out on their own. You need to be responsible for yourself, which is what the book talks about. And it would then tell you how much oil there is. And so they sent satellites up into space. Obviously that costs a little bit of money. But they figured out how many oil reserves there were and were able to use that to place very, very successful multi-million-dollar oil trades. So what are you doing to be able to achieve the same kind of thing? And this is what we look at in my investment club now. We look at different ways of looking at things differently, figuring out new strategies, and where there is a lot of money to be made, because you can reverse the actual effect of time and compound interest by finding higher yield returns. So we need to be more like that oil billionaire, and that's what we look for, and that's what we work together. But Random Walk on Wall Street is a great book to be able to start that process in order to start thinking differently, so that you can be just like those newbies and not walk into a bar and turn into a joke, but to actually make serious money on the stock market using the principle of randomness.